on CNBC TV18, your Kotak show where we aim to get you all the key data points to gear up for the next trading day. I'm Bala. With me is Rima Tendulkar as well. Rima, good day coming in for the markets. We've started on a positive note as well, where Nifty is closing above the 22,500 mark.
We had positive, indeed. We had positive global cues to begin trade with. There was a rally on Wall Street. They rebounded. So we started off with strength. And the good part is Nifty, even by close, managed to hold on to the 22,500 mark. It did come off from the highs. At one point of time, the Nifty got very close to its 20-day moving average, which is 22,587. So from the opening highs, we did come off. But on the whole, you would say this was a steady trading session. Banks did well. Banks outperforming for the third consecutive day, so that's a positive. The Nifty Banking Index ending with a gain of about 0.7%. Mid-caps did well. The mid-cap index also outperforming to some extent. The only disappointment is the advanced decline ratio, because when we started trade, we had about 3 stocks advancing for 2 stocks declining, and those 2 lines crisscrossed. And by the end of it, nearly 1,700 stocks declining for about 1,000 stocks advancing. So that was a bit disappointing. The financials, whether it's insurance, whether they're NBFCs, whether they're large private sector banks, all did well. So take a look at the top Nifty gainers today. So on that list, you've got an SBI Life, nearly 4% up, Bajaj Finserv, Axis Bank. So strong moves, Bajaj Finance ending nearly 2% higher. Pharma and metals. Nifty Pharma sectorally led the gains today. Metals did well, the Nifty Metal Index ending up. And on the way down, IT. The Nifty IT Index recovered from the day's low, but still, it underperformed. I think the Nifty IT Index ended flat, but as you can see, by about 12:15, a recovery started in Nifty IT Index, so it ended flat, but still underperformed.
Absolutely, but interestingly, Rima, a couple of names in the pharma side also. Actually, pharma saw a lot of buying interest coming in today. Do not forget, Nifty Pharma has seen a sharper fall in the recent times as well. So Nifty Pharma names, whether you look at Biocon, Dr. Reddy's, Granules, they were among the top movers in today's trading session. Nifty Pharma among the top sectoral gainer, ending with gains of more than 1.5%. Other than that, chemical stocks, that also saw a lot of interest, and we're seeing a lot of, green coming in on the screen. So Coromandel International, UPL, Chambal Fertilizers among the names that were buzzing in trade, and cement stocks too obviously were some of those names which were seeing some bit of an interest coming in. So Dalmia Bharat, JK Lakshmi Cement, all of them saw a bit of a green on the screen today. But yes, that's how we saw the market setup looking like. But on that note, we'll get started with the first segment for the show today, and we have Vivek with us on the big ball, who's here to tell us which are the important stocks that were moving in trade today and the movers for today. Vivek?
Well, thank you so much for that. Again, a session where you actually saw the advanced decline ratio to be quite strong, broad end with markets doing quite well. Amongst the gainers, something that you just alluded to, the entire pharma pack saw a bit of a bounce. It's seen a significant sell-off on back of tariff worries, but today you saw a significant amount of bounce back from the intraday lows. In fact, Dr. Reddy ending almost 4% higher as far as the entire pharma pack was concerned. Some of the other names like Biocon too did quite well in the session. The other stock on the list is KC International, an order win share coming in, a company on track to go ahead and meet the FY25 order inflow guidance of close to 25,000 crore, almost 35 to 40% jump as far as FY24 is concerned. Back of that, one of the top gainers as far as the NSE 500 index was concerned. This entire cement pack, remember, last week fell on worries and as well as the derating on account of taxation coming in as far as limestone mining was concerned. But today, the entire pack, Shree Cement, Ramco Cement is the name that we're talking about, Dalmia Bharat, all of them rebounding quite sharply in the session today. Kirloskar Oil Engines for the other stock on the radar. Motilal Oswal came out with an interesting note. They expect demand to pick up as far as the HP diesel gensets are concerned. On the back of that, almost 2.5% higher. And Muthoot Finance, one stock that continued to see significant sell throughout this trading session, was Muthoot Finance. This on the back of the fact that the AUM of the gold loan business crossed almost 1 lakh crore. Along with that, prices still remaining quite strong. Amongst the list of laggards, something that you just alluded to, LTIMindtree, one of the key clients, Citigroup, going ahead and saying that they're looking to reduce dependence on external IT vendors. Back of that, stock ended lower by 2.5%. Firstsource Solutions, again, mid-cap IT under pressure today. Select names saw much more selling pressure. Firstsource down almost 8%. And lastly, IKS, something that we'll just discuss later as well. There was a share lock-in that will be ending tomorrow. Almost 2% of the equity now eligible for sale. Under the back of that, IKS too saw significant selling pressure today.
Thank you very much for that, Vivek. Sudeep Bandopadhyay, Group Chairman at IndiTrade Capital, and Jay Thakkar from ICICI Securities are with us on the show. Gentlemen, afternoon. Jay, let me start with you. Good day today, fairly steady. What is the setup looking like for tomorrow, the rest of the week?
Good afternoon to you, Rima, and good afternoon to Vinny. Well, overall, I would say that yes, the start of the week has been positive. For the last week, we saw Rima being a truncated week. Market more or less traded quite sideways after a strong bounce back initially. That is, at the start of the month, which we saw. Nifty bounced back from those 21,960 to 22,000 levels until 22,700 plus levels. And thereafter, we saw some profit booking from the higher levels and consolidation for the entire week. Now, this start indicates that there is a very high chance of a breakout on the upside from this consolidation of a week or so on the Nifty, which can help Nifty to bounce back until 22,800 to 23,000 levels, which is also a house view that we can see a bounce back till this upper end of the range, which was earlier acting as a support, now might act as a resistance, but then those levels can be tested. Also, if you look at the derivatives data, Rima, then the PCR has improved in almost all the indices. If you see from Nifty, Bank Nifty, Nifty has been relatively outperforming, when the PCR has jumped to 1.34. Else, there has been a good put base now, which provides the comfort on the long side, at least for a bounce back until 22,800, 23,000 levels. It's just that a couple of sectors like Nifty Realty, Nifty Infra, Nifty IT, as you were also mentioning, are underperforming and are not able to bounce back. Also, might be Nifty Auto. These are the couple of sectors which are not participating. Else, if we look at the major names like banking, financial services, Reliance, maybe Kotak Bank from the private sector bank. These are all the stocks which are really looking positive and might have Nifty inch higher. And globally, we have seen the volatility cooling off a bit. Here to the IVs or India, which has been consolidating between 13, 14. The crude has dropped. The XY has pulled off quite a lot from the highs. So this all evidences makes a strong case for a bounce back till 22,800 to 23,000 until the recent lows are held.
Okay. Sadeep, what is your thought coming in on the market side as well as in terms of the pharma sector, which has seen a bit of a pressure in the recent time as well. We've seen that fall coming in, those uncertainties, and there was a bit of a jitter. Today, it's a different story for Nifty Pharma, right? Top sectoral gainer. We are seeing gain across the board coming in. Your thoughts here?
We have to still be a little careful as far as pharma is concerned. There is there's a huge amount of talk going around on around the tariff thing, and if there are tariffs, of course, long term nobody benefits, and I think it is not in the interest of US. But the reality is tariffs are going to probably come. And if that happens, I think initially, at least the margins of the pharma companies, Indian pharma companies, which are manufacturing in India and exporting to US will get depressed in a significant manner. Under these circumstances, one has to play pharma. I think better to focus on domestic focused pharma companies or pharma companies which have a significant manufacturing facilities in US. So, in both the categories, if I look, I think my favorite has been Mankind Pharma, 95% domestic business, or Piramal Pharma, which also valuation-wise does look attractive and which has a significant manufacturing base in US. Of course, the CDMO business is doing well, hospital generics doing well. So there are a lot of positives on Piramal Pharma, but more important, under the circumstances with tariff sword looming large, I think both these companies do look good from my point of view. If you're not a too risk-prone an investor, if you're not an aggressive investor.
Got that. That's been your mantra today, right? Aggressive investors can go out there and buy some shares. So we'll get your view on stocks like MobiKwik, IKS, Sai Life, because they tumbled as their lock-in period ended today. Hormus has compiled the data. There are 7 companies where the lock-in period ended today, and stocks got hit, Hormus, to say the least.
Oh yes, they did, and most of those reactions came in stocks like IKS and in MobiKwik as well. But we start off with that, right? 19.5 crore shares, 7 companies. Of course, you need to mention the fact that the lock-in period ending does not mean that all of those shares will be sold off in the open market today itself. Of course, they just become eligible to be traded. And a lion's share of that 19.5 crore shares come from Vishal Megamart. There's around 15.5 crore shares to one company itself, 3% of the outstanding equity, and it's one of those recent listings that is still continuing to hold above its IPO price. You mentioned MobiKwik, that was one of them that has seen a significant price damage, and Here too, 46 lakh shares, 6% of total equity. The stock is down almost 65% from its post-listing highs. Ajax Engineering too, 3% outstanding. That stock too is down, is trading below its IPO price. IKS as the one biggest underperformer of the day today among those whose lock-in period was ending. That stock too is trading well below its listing price, now tumbling towards its IPO price. And around 2% equity became eligible to be traded here itself. Sai Life Sciences saw 4% equity. EMS saw 20% equity. And EMS is one of those few names that despite almost correcting 40% from the peak, is still up 3x from its IPO price. And Ratnavir Precision too, another 20% outstanding, becoming eligible to be traded. That stock too has halved from its post-listing high. So interesting names there. It'll be interesting to see how these stocks move from here on with the price damage being done in today's session.
Okay, Urmas, thank you so much for that. Will be surely interesting to see how they move on from here. Jay, just coming to you as well, any of the names that Urmas has mentioned, I know that, they are recent, there's not much in terms of charts that you have, but where you think that's something that you would look at in terms of an interest right now, any of the names?
No, I mean, these stocks really don't have much of the data for me to read into. Hence, I would not be able to comment on these stocks.
Any of these stocks, Ratnavir, IKS, MobiKwik, Vishal, Megamart, they've all corrected from their highs. Any of them look interesting for a conservative and an aggressive trader? Let's go with conservative first. Sudeep?
Well, okay.
I do like Ajax Engineering. I think the business is solid. And long-term, from a long-term investor's point of view, this looks good. Yes, if you have a bit of a risk appetite, because correction may be deeper at some stage, but you can't wait for that. You can start accumulating this particular stock. MobiKwik, on the other hand, has significant potential, but I believe that there is some further correction possible here. So keep watching. At some point of time, MobiKwik will also be worth buying.
Okay. Surely, MobiKwik will be worth buying after some correction. That's the word coming in there. But let's move on. And shares of Ola Electric, that also slipped in trade after a vehicle registration agency that's Rose Mehta Digital Services sued the company for defaulting of the payments. Parikshit is joining in with us to give us more details on this front.
Well, Ola Electric's stock has been under pressure for multiple reasons. One, the Q3 loss had widened to 564 crores. They also face 10,000 consumer complaints with the CCPA. Those are still under investigation. They've been seeing a dip in deliveries. And now there is this issue, this legal case that one of their vehicle registration agencies, Rose Mehta Digital Services, has filed against Ola Electric for non-payment of dues to the tune of 22 crore rupees. Now, all of this began on the 19th of February with Ola Electric saying that their Vahan registration numbers, vehicle registration numbers in the government portal are going to be impacted because they are renegotiating their contracts with their two vehicle registration partners. They sold around 8,600 units in February as per the Vahan data, as per the vehicle registration data of the Ministry of Road Transport and Highways. But Ola itself claimed in a stock exchange filing that they've sold 25,000 vehicles. Now, this definitely does raise some questions because as per the motor vehicle rules in India, you cannot sell a vehicle without registration. Secondly, if you do sell a vehicle without permanent registration, it has to be a temporary registration for a maximum period of 1 month. And after that, an extension has to be applied for with the RTO. Has all of this happened? Were these 8,600 vehicles that were sold in the month of February, as per the Ministry of Road Transport data, were they sold and registered through Ola on their own or through their agency? What about the rest of the vehicles that Ola is claiming? They're saying 25,000 vehicles sold. So were these temporary registrations? That is something that Ola needs to explain. Now, if we add up the Vahan data for February and also for March, in March, they've sold around 7,500 vehicles as per the vehicle registration data till the 11th or 12th of February. So if we even add up this data, it doesn't come to 25,000. So there are some questions there for Ola Electric as to how they are going about registering these vehicles. How long has the temporary registration been going on for? Have they applied for extensions? When are they going to hire an agency for registrations? Are they currently carrying out registrations on their own? So a lot of questions there for Ola Electric as well.
Great, thank you for explaining that so well for us, Ola Electric. Now, the other stock under pressure today was LTIMindtree. And here, these are reports that we picked up from TOI, where they said that Citigroup, which is one of the world's largest banks, they're planning to reduce their dependence on external IT contractors. Instead, they want to strengthen their internal tech teams by hiring more people on their payroll, on the company's payroll. So increase that, beef up their internal tech team from 48,000 to 58,000 by the end of the year. And the key reason, the report goes on to say, is because of regulatory concerns. The company, Citigroup, has had to pay fines for breach of data governance standards. There have been fraud, etc. So therefore, the street was a bit concerned because a large client like Citigroup may have to bring down their tech dependence. If that is the case, then LTIMindtree could be under pressure because analysts I spoke to said LTIMindtree is one of the top 2 vendors for Citigroup, but even the other large IT companies do work for Citigroup. Here the question is only whether it's vendors or contractors. If it's subcontractors, it's unlikely to be a big hit, but if it is vendors, which they're cutting back on, then there could be some vendor consolidation deals. Some companies may lose market share, and therefore it's a bit of an overhang. And what if this trend of doing more work in-house spreads to other companies? Then the pie is only shrinking. And this comes at a time when anyway the street is concerned about growth slowing down in the US economy, therefore tech, large companies in the US tightening their tech budgets. So anyway, that fear, that overhang of weak macros is plaguing IT companies, and this came in as an additional blow. Sudeep, quick word on LTIMindtree. How would you read all the, it's news flow right now. Would it be noise or would you be worried?
Well, I'm worried. In fact, worried not because of the Citibank news flow, more because of what's happening in US. I think there's definitely a possibility of slowdown, and US slowdown is always bad news for Indian IT companies. Most of them have 50%, around 50% plus business coming from US. And if US faces a slowdown, obviously the business prospects, order wins, order enhancement, order execution, everything gets into a problem, margin gets into a problem. On top of it, as you rightly were mentioning, news like what we are getting from Citibank is definitely very, very worrisome because if, instead of outsourcing, insourcing becomes the trend in US amongst large corporates, that will be very bad news for Indian IT companies. So we'll have to watch this space, and it's better to be careful. Instead of focusing on, some of these companies, we should focus on niche IT companies. I do like Coforge quite a bit. One can look at, some of these specific focused IT companies. RateGain Technologies has lost quite a lot, but still it looks attractive at current levels. So some of these focused companies needs to be looked at rather than generic IT companies.
Okay, let's move on and pick up SpiceJet now. That surged in trade, and this came in after promoter Ajay Singh sold 1.15 crore shares via block deals. Now, SpiceJet has said that the fresh infusion will take place through conversion of 13 crore warrants into 13 crore equity shares. So, Darshan is joining in with us to give us more details on this one.
So on Friday, promoter and CMD of SpiceJet, Ajay Singh, sold more than 1 crore shares at a price of rupees 45.34 per share, worth rupees 52 crore. Now the question that time was why the promoter has sold stake. Now today the company has made another announcement that Ajay Singh will be selling up to 3.14 crore share. And the reason is another promoter, which is Spice Health, will be converting 13.14 crore warrants that it has into equity shares. Now to fund the certain part of those conversion of warrants, Ajay Singh is selling the stake. Now, once this allotment is done, promoter stake will increase to more than 33%, basically 33.47% from current holding of 29.13%. And now, but if you look apart from this announcement, if you look at the stock performance over the last few months, it has been underperforming its peers in the last 2 months. Basically, in 2025, the stock is down somewhere around 20%. And on the operational front, it has been underperforming Indigo. On the market share, in January, its market share was around 3.2%, which is down almost 250 basis points. So it has been underperforming peers on the operational front. But as far as this announcement is concerned, it's positive because the fund infusion of around rupees 300 crore will be made in the company.
Thank you very much for that. We also take the opportunity to thank both our guests for joining us today. We'll slip into a break. On the other side, we'll get you the top corporate voices along with the key market events to watch tomorrow. Stay tuned. Welcome back. Let's get to the corporate corner, the top corporate voices of the day. Brigade Enterprises. Management says their portfolio is diversified across mid-segment. In addition, the company is getting more traction from the premium segment. Further, the management guides for sales to grow by 15 to 20% on a year-on-year basis. They're also quite happy with the equity position they're holding at the moment.
Second on our list is Patanjali Foods. The management says that the company will continue to target 4% margins in oil business and 8 to 10% in FMCG. Meanwhile, Patanjali's home and personal care business will grow at 15% year-on-year in FY26.
And it's time now to get you all the chatter from Dalal Street. Nimesh joins in as always. Nimesh.
Hi, Ramayana. It's a strong day for the markets thanks to some very strong global cues, and India rallied part of it. In terms of sectors, private banks is where I understand there were strong buy flows, and Pharma stood out very well despite the overhang of the tariff which might come on April. So that's the overall market. But in terms of individual stocks, the first stock on my list is Power Grid. Within the PSU name, this is one stock which has been consolidating off late, but I understand the buy flows have resumed. So expect high delivery volumes, and there was buying interest in Power Grid today. The second stock is Glenmark Pharma. For the last couple of days, that stock is buzzing in trade. I understand the city is anticipating some corporate development as well. Potentially a value unlocking is what I understand in Glenmark Pharma for one of its molecules. So that's the trigger there. The third stock is Varun Beverages. Again, the stock has been buzzing in the last couple of days. There are buy flows. And also, the street is anticipating very strong Q4 in terms of volume growth. Having said that, there is also a buzz that maybe the promoter entity is done a small creeping in the last couple of days in Varun Beverages. And the last is Dixon Technologies. Has been under pressure in the last couple of days on the back of sell flows. I understand some domestic mutual funds are sellers. And also, Goldman Sachs should have put out a note. They maintain a sell rating. And they believe that the upside looks limited. And the earnings is going to see a bit of a cap as well going forward. So that is the reason why Dixon has been under pressure in the last couple of days.
Okay, Nimesh, thank you so much for that. Surely interesting chatter coming in from the D Street front. But before we wrap up this edition of Markets Forward, we bring you the key events to watch out for in tomorrow's trading session. Vamakshi is here to give us all those details.
Well, good afternoon, Vinny. As far as corporate action is concerned, we'll be watching out for Castrol India. The company goes ex-dividend. Apart from that, lots of board meetings lined up as well. CG Power will be considering an interim dividend for FY25, while TARC will be considering modification in terms of its NCDs. Now, several interesting developments lined up tomorrow. Trump as well as Putin will be speaking as US pushes for Russia-Ukraine ceasefire. NASA also says that Sunita Williams and Butch Wilmore will be returning to Earth after 9 months. RBI will be conducting OMO purchase for an aggregate amount of nearly 50,000 crores. The Delhi government will be implementing Ayushman Bharat scheme. And lastly, US Director of National Intelligence Tulsi Gabbard will be visiting India and is likely to address the Raisina dialogue.
Thank you very much for that. And the big global event for the week will be Wednesday, the Fed meet. Thank you very much, Vamakshi, for joining in. That brings us to a close in this edition of Markets Forward. Thank you for watching.